All right, good morning. Welcome to Your Business is Your Assets. Let's get into this meeting. Here we go. Very good. Okay, welcome along. Thanks for joining. So I'm going to go through. There we are. Good morning. Welcome to Your Business is Your Asset. This is where I want to take you through how to transform your business into your biggest asset. So this meeting, I'm going to pause. Okay, we are recording. Okay, round two, 3, 2, 1. Good morning. Welcome to Your Business is Your Asset. This is where I'm going to show you how to transform your business into your biggest financial asset. And we've got 3 principles to help you move through that from your entrepreneur into being an investor. And the idea is that we do all that by giving you some clarity, some purpose around what you're doing, how you're doing it, and why you're doing it. So let's move into this. So this presentation should take about 30 minutes, maybe 40 minutes. And it'll give you a good idea of some of the process that we go through and really just start you on that education piece about why we think this is important. Okay, so in New Zealand, we have property is a very large part of people's investing psyche. They think it's very important, and rightly so. It's very, it's part of what we do in New Zealand is we invest in property, primarily residential property, as a way of building up our wealth. Now, I'd challenge that a little bit and say many of us have businesses. In fact, we know that there's 570,000 small businesses in New Zealand with between 5 and 20 staff. So it's a big number. So if we're used to using property as an investment, surely if you're a business owner, you should also think about your business as being an asset as well, a viable investment asset. So when we're thinking about assets, when we're thinking about investing, when we're thinking about investment assets at all, there's always a risk on one side and there's value on the other. And business is exactly the same. So there's 2 important things you need to think about in terms of your business if it's going to be your retirement cash cow. Now, understanding business value is crucial because we need to know if we were to sell our business today, what would we get for it? And more importantly, when we get to the point of retirement and we need to extract cash from our business, what type of value will we need at that point? And maybe, let's just clarify something straight away. Not everyone is going to want to sell the business. They might want to put in place a management team and just have a yearly dividend from their business, and that's fine. But effectively, what we're doing is we're taking money out of our business. We're transferring the wealth back to us, or our family, or what have you. So that's fine from the value piece, but we also need to understand the risk piece. And what that is anytime a risk event happens to your business, you have a massive chance that the value of your business will erode, will plummet. And I'll go into that in a bit more detail later on, but you need to understand that if you have a risk event, it's going to negatively affect the value of your business. And so if that's the case, we need to manage that risk, okay? And the whole point is that we're trying to maximize the value of your return on your investment, which is your business. How do we maximize that return? Well, we need to minimize the downside risk and maximize the value. So two pieces, two sides of the same coin. Now, straight up, we need to make sure that this presentation will actually be fit for purpose for you. Okay, so this is designed for small business owners. It'll help if you're a single one-person, solopreneur. But really, I guess what we're looking at this is business owners who have got, I guess, between 5 and 20 staff. Now you might be a little under that, you might be a little over that. Doesn't really matter. It's just, I guess, a bit of a benchmark. Now you're probably here because you're looking for some certainty in retirement. Obviously, you know you're going to retire at some point. But what does that mean? What does that mean in terms of your working career? Are you going to completely stop work? Are you going to focus on perhaps some community things that you want to do? Are you just maybe going to work 1 or 2 days a week and just kind of keep your hand in and keep the business ticking over? You'll have some idea of what that is for you. And the idea of this presentation is to help give you some of that certainty. Frustrated by the slog and the effort. Running a small business is pretty hard, right? So it can be frustrating to be spinning the wheels and thinking that you're not actually going anywhere. Unsure of the direction you're going in. We know that 80% of business owners don't actually have a business plan. In some cases, 90% don't have a business plan. It's very hard to know if you're going in the right direction if you haven't actually got a direction or a focus on where you're going. And then a feeling that you don't have any control. And the two things are kind of related. If you don't have a business plan, it's very hard to feel like you're in control because you don't know what you're in control of. And then the last one, wanting to build a legacy. Now, this doesn't apply to everyone, but for some business owners, they want to build up something that they can pass on, that they can have for their family, maybe their extended family. Maybe there's a desire that the kids will actually run the business. Whether or not that happens is neither here nor there, or just that there's some part of the legacy of their creation that can continue. Okay, so that is relevant for a lot of people. So just want to highlight that while we're talking about your business is your asset, which is effectively across 3 dimensions of protecting your business, finding value within your business to later on build that into your retirement planning. That's great. That's what we're talking about. There are a whole heap of other services that we provide as bolster risk management. You can see them here: life insurance, health insurance, typical business risk. We're associated with a lot of other key institutions, and we can help in many different ways. So from a financial advice perspective, we've got it pretty well covered. And if we can't do it directly, we certainly know some people who can look after you very well. So entrepreneurs, if you're in business, you're an entrepreneur. I interviewed someone a little while ago, and he said, sometimes we get a bit funny about calling ourselves an entrepreneur because it's like a bit of a label, or, am I really that kind of person? If you're in business and you're making decisions and you're having a few failures and you're getting up again the next day and you're carrying on and doing all that kind of stuff, you're an entrepreneur. It's okay to call yourself an entrepreneur. And if that's the case, great. Now, if you're here and your business is more than just a job where you're getting a weekly income and you've got an eye on what your business might be in the future, this is the place for you. Simple as that. But what we want to do is make sure that your business will actually pay off in the way that you expect. And what that means is that when you exit the business, you can do so when you want. So at the point in the business life cycle, you can exit at the time that you want, for the price that you want, and in the manner that you want. Now, I talked about the manner a bit earlier. You might want to exit completely. You might want to have a management team in there. You might just want to have a 10% shareholding and just expect a little bit of cash over time. Whatever that looks like for you, you need to be clear on that, and then we can help you get to that point. yeah, just kind of highlighting that whole point. So the price that you want, getting the maximum price. Got to be really careful that we don't erode the value of our business on the way through. So my aim for you today, can we help you get some control, take some control over your business, give you some certainty about the future, and also throw in a risk management plan. It's just a simple way to give you an idea of some clarity that if something bad happens, you know, at least you've got the bones of a plan to get you out of that trouble. A little bit about me. So I've done a few things. I've been around a little bit. I graduated from Massey with an MBA 10 years ago. I did my thesis on mergers and acquisitions here in New Zealand, and did an elective paper on financial risk management. Talking about options and futures and all that kind of stuff. It's not what we're covering here, but it was very, very interesting. I've managed teams, run business units and a whole heap of stuff in between for 20 odd years. But I'm really excited about talking to people about trying to help them have some kind of financial peace of mind. I really think that businesses can do more than just make the business owner a lot of money. I think that's valid, but I think businesses can also help support their employees by being good employers, and that by extension helps the communities in which we operate. So I think the whole thing, it's a lot more interconnected than just the person at the top getting a whole load of money. I think we owe it to the people who we interact with, our clients, our providers, to do the best that we can so everyone actually benefits. Okay, now just a little bit about here. Very easy to get distracted, especially with phones. Just put it aside. We've got about half an hour to go. Hopefully we'll give you a whole lot of good information. Whatever's on your phone can probably wait. Just park it to one side. This is a video, so just pause and come back when you need to. And that's, let's crack on from there. Now, what I'd like to do at this point is just, with your permission, I want to just talk about the elephant in the room, because you're going to be watching this guy and there's going to be a hook somewhere, there's going to be a gotcha moment. So let's just clear that out of the way. There is a cost to this program. Okay, there's a cost, and this is it. So from the point of view of a business owner coming to me and saying, Dom, I want your help across these three dimensions of protecting against my risk, finding value for my business, and giving me a retirement plan so I can build wealth. What is the package? So there's an upfront charge of $600 plus a monthly fee of $150. So in the first year, it's $2,400 plus GST. After that time, it's a monthly subscription of $150. And what that allows me to do is to create 3 plans for you, and I'll discuss those a bit later on. Do the detailed analysis for you, get your plans onto a page. I don't like a big 70-page document, so we'll get that down onto a single page. You'll have your value canvas where everything is just basically your business is your asset on one page, so you can see where you're going. And then we do some quarterly or semi-annual governance reviews, informal governance, right? And the idea with that is that we know that most businesses don't have external advice. So part of the subscription allows me to stay in contact with you and just cover some of that external informal governance function for you. I can do each of the plans separately, separate costs for those, but then you don't get the holistic view of what we're trying to do. Okay, so that's it. We'll talk about this a bit more later on, but that's the elephant in the room. Now we know, let's move on. So what I'd like you to do now is just grab a quick piece of paper and let's score yourself. Let's just see where you are right now. Remember back at the start, I said, let's give you some control about where you are, some certainty about where you're going, and a risk management plan. And this is just part of it, okay? So first off, we've got to know, where are you now? What is the current state of play at the moment? So 10 questions, simple yes or no. Do you have an up-to-date cash flow forecast for the next 3 months? Yes or no. Have you mapped out how certain risks will affect your firm's profitability? So for instance, if you've got a key salesperson who's generating 50% of your revenue, They're hit by a bus. How does that affect your net profit on the bottom line? Okay. Do you review your risks every year? Do you have market competitive benefits to attract and retain your staff? Now, if you're a solopreneur, obviously this won't be relevant to you, but even so, if you are a solopreneur, are you paying yourself a good market rate, or are you paying yourself just to get by? Um, are you using some of the excess business cash to invest in other assets? Do you have the right insurance in place for the size and nature of your business? Now, every business is going to be different sizes, different requirements in terms of insurance. Do you have insurance in place? Do you measure your business against key performance indicators at least monthly, so you know whether you're on track or off track? Do you have some form of external advice or informal governance to help you review at least half a year or annually? Do you know the value of your business? So if you're to sell it today, do you know the value of your business, what you could get on the market? And lastly, do you have a clear growth or exit or succession plan or something written down that you're actively working towards? So you've got a point in the sand in the future, you're saying, we're working towards that. Okay, now add up your yeses, add up your nos. How many yeses out of 10? The closer you get to 10 out of 10, the more robust your business is. The closer you are to 0, then the more we probably need to have a chat. Okay, so it's just a quick assessment to help figure out where you're at. Okay, it is your business, right? So you've got an idea about your business, got an idea about where you're going. You need to have that plan. So protect against risk is a key part of the first step. If you're not protecting against risk, the value of your business will erode when a risk event happens. And the whole thing that we're trying to do is grow the value of your business. So by having a business plan, by having some informal governance, it's all about creating value, maximizing the value of your business. Why? Because at the point that you want to sell your business for retirement or whatever else it is that you want to do, you've got a clear idea of what that number is, and that's what you're aiming towards. So you get some certainty about the future. So common mistakes for the small business owner. And this isn't a definitive list, and you might argue with some of these, and that's fine. But the key one is that there's no business plan. So recently, at my BNI, the networking function that we go to every week, one of the ladies stood up and said, I used to work for an accounting firm. This is what she said. And that accounting firm, they conducted a survey of all their small businesses. And they found that 93.4% of their businesses did not have a plan. So when I said earlier that about 80% or more don't have a plan, it was backed up by figures, right? So if you don't have a business plan, it's really hard for you to know where you're going and why you're going to get there. Don't know the end point. Very similar to not having a business plan. Start with the end in mind. As Stephen Covey, the 7 Habits of Highly Effective People. Start with the end in mind. Know the exit point and what you're trying to achieve, and then you're working towards that. Don't understand the impact of a risk event on the bottom line. Now, I've said this a few times already. For example, if you've got 2 shareholder directors in a business and you don't have a shareholder agreement, or perhaps you do have a shareholder agreement, but you don't have financial mechanism in place, one of them dies, how does the other one buy out the shares of the deceased estate? It's a big risk, legal and financial. Okay, don't realize the importance of having KPIs to measure business performance. If you're not measuring what you're doing, how do you improve? How do you know you're improving or getting worse or better or whatever else? What gets measured gets done. And again, don't have external advice team or informal governance team. You can't be the best at every part of your business. Now, you might be a great sales guy or a great operations guy, and that's why you're building your business, because you're fundamentally good at the part that you're doing. We hear about wearing the many hats of the business, but you can't be good at all of it. So you need someone outside of you, outside of your business, to give you some feedback, to give you a bit of a sounding board, to say, hey, perhaps that direction's not quite right. Let's go down this track, or to at least challenge you a little bit. We need it. We all need it. Okay, so they're the common mistakes. Let's just go through some examples. Many years ago, I worked with a company, and what we were doing was buying competitors and rolling them up into a bigger environment. It's the postal services. We were doing due diligence. I was part of the due diligence team, and we were looking at a whole lot of different businesses. I remember this one company, and this is reminiscent of many of the companies we looked at. A mum and dad firm, very successful. They'd had the business for 15, 20 years. They had a good amount of people in the team. At the height, they were turning over a good sum of money. But by the time we came along, we picked up the business for what we thought was a good deal, but from the owner's point of view, they would have been disappointed. Why? They got tired with it. Maybe they got bored. They took their eye off the market and what the market was doing. There's some fundamental shifts that were happening, and because of all these things, they had eroded the value of their own business. So it meant that we came along and were able to pick it up for a good number, and then synergize the costs and do well out of it. They were essentially unprepared about selling their business. Now, I interviewed a business broker a couple of months ago for my podcast, and three key things he said, and this is stuff that we all know. 70% of businesses that list with a broker fail to sell. Many are unprepared, and in fact, it takes firms at least 2 years, most likely 3 years or more, to actually prepare for the sale. And that means untangling the proprietors, the owners' income and all the little bits that they're getting from the business, untangling all that so the business management accounts are actually ring-fenced and don't actually show so much of the owner's activity. It can take a while to actually prepare your business properly. So don't leave money on the table, prepare for your sale. Another example, so we'll talk about shareholder director in a business. Two directors, again, this is just an example. Both are active in the business, 50-50 shareholding. The gross profit on the business is 400,000. Net profit is 20,000 and retained in the business. Each earn 100,000. So it's a modest company. And expensive 180,000. Now the value approximately 3 times earnings, just to keep this example simple. Therefore, the business is valued at 660,000. So for each of them, it's worth 330,000. Now let's say that Bob dies. Sorry, Bob, you're out of the picture, and Vera now needs to find $330,000 to buy out Bob's estate. They've got a shareholder agreement in place, which is good. So they've had a good lawyer put in place a good shareholder agreement. It says if one of them dies, then the other one has first right to buy the business. However, where is Vera going to find $330,000? Let's assume that her home is fully mortgaged. Is the bank going to suddenly give her that money? Where's she going to find that money? Now, insurance is one way of having a financial mechanism to make sure that that kind of transaction can happen. And Vera would want to make that happen because otherwise Bob's kids are going to come in and they might wreck it. And Vera didn't go into business with Bob's kids. Vera went into business with Bob. So you can have these kind of dynamics, and this kind of story plays out a lot. Okay, another kind of risk that you might have in business. So I used an example earlier about a key person. Let's say you've got a key person who is bringing in 20% of your overall revenue. Revenue is 1.6 million, gross profit 640,000, director's income 150,000. Okay, fine. Now, let's say we'll call her Sally. Sally is hit by a bus and is out of action for 12 or 18 months and is not part of the sales team. So that company now is missing out on 20% of its sales. So the revenue's dropped to 1.3, so it's 20% drop. Gross profit has continued to be up there, 570,000. The director's income now has gone from 150,000 down to 57,000. Now, if you're a director of a business, how do you feel about 2/3 of your income suddenly being wiped out? This is the kind of risk that we're talking about. Okay, so understand the impact on your bottom line of these risk events. Really important. Let's go back to think about the yes/no questions we had at the start, the 10 questions. And just in context to some of the examples I've given just now, think about some of your gaps, some of the no's that you have perhaps on your answers, and think about how that might start impacting on the value of your business or the operations of your business. Okay, you need to start being cognizant of where all this is going. Okay, now let's have a look at your own business. Now, on a bit of paper, I'd like you to have 3 columns. This diagram's not showing it too well here, but on one side, I want you to have future, on the other side, current, and in the middle, we've got the gaps. So right now, just write down some things about, in your mind's eye, if everything went swimmingly well, the future state of your business. Maybe that's how big your team is. Maybe it's a revenue number you've got in mind. Maybe it's a net profit number you've got in mind. Maybe it's you doing business in 5 different countries. Whatever it is, just put down that sweet spot of where you'd like to see your business. Incidentally, I've just done a video on this. It's about a 15-minute video on this in the next slide, just to talk you through that. If you'd like to know that, please let me know and I'll send you the link. Okay, so I'm going to assume that you've paused the video and you've filled that part in. So now welcome back. Now let's just think about that first side then. So what's the current state of your business? Where are you currently in terms of your operations, your staff? So with a mind on the future, where are you currently? And list that down. So maybe it's your revenue number. Maybe only operating in 2 countries when you want to operate in 5. Whatever the differences is, just think about your current state now. Okay, again, I'm going to assume that you've paused the video, you've written that down. Welcome back. Now let's do these middle 3. Now with change, when you want to do a change, there's only 4 things you can do. We can either start something new that we're not currently doing. We can stop doing something that we shouldn't be doing, that's not actually helping us at all. We can do more of something that is helping us, or we can do less of something. So when we think about change, so where you are, where you want to be, there's only 4 things that you can do. Let's start here. So the first one, what's something that you can start doing to help move you towards that future state? What's something that you're currently doing that you should stop doing? Perhaps it's some activities that you're doing that actually aren't generating any revenue, a complete waste of time. Most of the time we know this kind of stuff, we just don't put it down. Put it down. What's more of something that you're doing? Do you need to hire more sales team? Or what's something that you need to stop doing so much of? Are you doing a whole lot of admin? As a business owner, are we spending too much time doing these loads of busy tasks, but not actually working on the business? Now, what you've got at the end of all that is you've got the bones of a basic business plan. It's not a 70-page document. We don't have a full financial analysis. It's none of that. But it's a very simple start of, I want to be here. I'm currently here. These are some of the things that need to be done to get me there. Simple process. Keep it simple. If it's not simple, it won't get done. Next one is a very similar theme. So from a risk management point of view, let's start identifying your risk. Now, again, as I said, both these documents, we've got them on fillable PDFs. So ask me and I'll send you the links. So the first one, just have a look at your risk. So on the left-hand side, we've got the likelihood of an event happening, and the bottom line is the severity. So the bottom left corner is low impact, not likely to happen, and if it does, it's not going to impact your business that badly. The top right, if something happens, it could be fatal to your business. Okay. So let's have a look. Fill in some risks that are apparent to you. It might be a cyber risk, it might be brand reputation, it might be salespeople who are pissing off your clients. Okay, so think about, for you and your business, if that happened, how damaging would it be to your business? Maybe it is the loss of a key person. Maybe it's the loss of a shareholder. Maybe it's your building burns down and gets flooded, or what have you. If these things happen, put them in a box, so at least you've identified them. A lot of the time with risk management, we don't identify, we don't take the time to just identify what they might be. And if we don't know what they are, we then can't mitigate it. Again, I'm going to assume that you paused this when you needed to and you've come back. So now just choose 3 of them. Choose your top 3 risks, write down what it is and the impact it's going to have on your business or your family if that event happens. Now think about a possible solution. Most of the time we have an idea of what we might need to do to resolve that risk. What are some actions right now that you can take to mitigate that risk? Maybe it's speaking to your insurance broker, maybe it's talking to your lawyer, maybe it's talking to your recruitment agent to hire more staff, whatever it is. And then put in a deadline. If you don't put in a deadline, it will never happen. So I need to do this today. I need to do this within a week or within a month. Whatever it is, put a deadline on it. Congratulations. You've now just done your basic risk management plan. Again, it's not a 70-page document. It's not exhaustive, but it's giving you an idea that if X happens, I've got some idea of what I need to do to mitigate that risk. Okay, so we're now getting a little bit of control. Those 2 documents are giving us some control over where we're at, a little bit of certainty if we do these things over the future, and we've got the bones of a risk management plan. That's fantastic. It's great. So we're starting to protect against our risk, we're starting to find some value, and all of that will help lead towards building our wealth. So 3 principles to maximize your return in terms of your asset. Now we talk about businesses a lot. We talk about homes a lot. We talk about selling homes or having investment properties. Now let's just think about that for a moment. Now, if it's your home, you're probably not going to neglect it too much. You're going to give it a lick of paint when you need to. You're going to be adding value, maybe change the kitchen every now and again. You're probably going to have some insurance on it to make sure it's protected. And when you want to sell it, you're going to make sure that the lawns are done, that the paving has been sorted, that the outside windows have been cleaned, all that kind of stuff. So wouldn't we do the same for our business? We spend time getting our business ready to sell. We have insurance on it. We're trying to add value to it. We don't neglect our business. So let's just think about that for a moment. Let's use property as a really good example for having your business as an asset. Many people, you might not be an investor in property, and if you're not, you probably know someone who is. So just go through a scenario with me. You buy an investment property, it's great, you've won the bid, fantastic. And the first thing you want to do is change the bathroom, because you know if you change the bathroom, you're going to increase the value by an extra $30,000. So you spend $5,000 to get the bathroom done, okay? Whatever those numbers are. Great, so what you've just done is you've added value, you've grown the value of your property, your investment property. Next thing you're going to do is bring in a tenant. Now, you're probably going to have a property manager because they'll help you find the right tenant. You might have some insurance. You need it for the bank, but you're probably going to have some insurance anyway, so that if the tenant does something naughty, you at least cover your risk with that. So you're protecting your investment. And because you've made a bit of a change in the bathroom at the front, you can actually charge a bit more for your rent with your new great tenant that the property manager's found for you. So that means that you're extracting a higher value from your business as you go through the journey. Now, at some point after years, decades, whatever it is, depending on the type of investor you are, you decide to sell your property. And what you're going to do is transfer the value from the property to yourself. So you're transferring the property from you to another vendor, and you get the capital gain. So you've done 4 things. You've grown the value of your property. You've protected the value of the property by having a property manager and insurance and what have you. You extracted value from the property by having rental income, and you're transferring the value at the end. Do we not do the same with the business? We grow the value of our business. We try and protect it on the way through. We extract income, dividends, whatever it is on the way through. And at some point, we're going to transfer the value from us to someone else and realize the capital gain. Same thing, exactly the same type of thing. So with that in mind, what does your retirement look like? When you retire, what's the plan? How much income are you going to need for you, your spouse, to live on in 15, 20, 25, 30 years you'll have in retirement. And maybe you'll be working part-time, maybe you'll do other things, maybe you're looking after the grandkids, that's all fine. But you've got some idea of what that retirement looks like. And if you don't, we need to think about that. We need to help you think about that. Are you building an intergenerational legacy? Is there something that you want to not just help your kids, but help the grandkids and maybe the great-grandkids, so that the money that you generate through your business, the wealth you generate through your business, can actually help your family for generations, and not just for you in retirement, but working all the way through down the line. Now that's quite a powerful thing. How do we start that process? Well, for us, we've got a 5-step process. The first part, we need to assess where you are. So if we're going to secure your financial future today and transform your business into your biggest asset, let's assess where you are today and what you're trying to achieve. Now, from that point, I'm probably going to need to collaborate with your lawyer and your accountant, at least, to get an understanding of where they're at to help you. So yes, I'll be collaborating with you, of course, but we need to make sure that I'm working well with your accountant and your lawyer. And if you don't have a good accountant and lawyer, I know plenty that we can bring in a team and have a team of people around you to help move you through. Then we create a plan. So each principal will have a plan. So protect against risk has a plan. Find value has a plan. Build wealth has a plan. All of that goes onto your value canvas, so you actually end up with just a 1-page summary. And then we execute. Now, most of the work, sorry to say, has to be done by you. You're the business owner. It's your business, not mine. We'll give you as much as we can to help you go through it. But then we'll also be there to help you review and make sure that you're on track. So we'll review the plan. It's a 1-page plan, say, have you done that part? Are we on track? Have we missed it? What do we need to do? There's a simple discovery process. People will come from different points of view with different issues. Now, it might be that instead of doing the full plans, we just need to start off real small. Maybe you haven't even got a will in place. Okay, let's start by putting a simple will in place. So at least if something happens, get hit by a bus, get some idea of what's going to happen. Okay. I've got a blueprint for success, part of the discovery and assessment process. It's a simple blueprint process that takes us through, it's about 30 minutes, just to make sure that we highlight the things that are gnarly right up front, and then we work out the plan after that on how we're going to truck on through. Plan on the page, I keep talking about this. I don't like 70-page documents. I've written many business plans like that with a full financial analysis. They're great. Bank likes them. They get put in a drawer. No one reads them. Really hard to communicate to your team your vision when you've got a 70-page tome to try and flip through. Let's put it on 1 page. Very easy to communicate to your team. Very easy to review with your team. Very easy to review with me and say, how are we doing? Okay. Yes, you still need all the meat and potatoes underneath it, but essentially you only need that one piece just to have a good conversation. So I've talked about the process, the program. Yes, we assess where you're at, collaborate with your accountant, lawyer, with yourself, go through, create those plans, and then we execute. The key thing here is we're trying to think about time. Everything is to try and give you what you want at the time that you want. The main question we need to think about is what can derail it all? So as we're taking you through this process, what are some of the things that are going to come at you to take you off this plan, to take you off this process? We need to think about those up front, because when they happen, we can then have an adult conversation about them. Okay, so understand where you are and how much you can dedicate to this, and we'll work on through. I worked with a number of people. They seem to like what I do. I've got a pretty good rating in terms of Google score. Happy with that. Jump on Google and see for yourself. In terms of what you get for the value that you put in, here's a list here. Look, 7 keys to understanding your business for a successful business: actionable plans, retirement, investment plan, It's all here. It's all here on the table for you. Okay, coming towards the end now, just need to think about, as I said a few moments earlier, I think businesses can do a lot more than just making the guys at the top money. I think it's important for us to think about the communities that we're in, to think about our staff, to do the right things by them, do the right things by providers, the right things by our clients. If we do all of that, then I think we've got a good business doing good. We support motor neurone disease here in New Zealand. My father-in-law was struck down by this disease about 5 years ago. It's a horrible disease, so we make sure we support these guys. Next step, book a 30-minute blueprint session with me. If that's too soon for you, I understand. Okay, I've written lots of articles, browse those on LinkedIn, listen to the podcasts, the videos that I'm doing apart from this one. But really, most of the meat and potatoes I've shown you is in this session. So if you have any further questions, let me know. But otherwise, just book that session, book that blueprint with me. Only takes 30 minutes, and that'll help me really narrow down how do I help you the most quickest. Okay, what you do makes a difference, and you have to decide what kind of difference you want to make. It's your business. What do you want to do with it? Where do you want to take it? How can we help you maximize the value of your business? That's your lot. That's it. Thank you for joining. As I said, come back to me with any questions, concerns, comments that you have. Otherwise, book in a session and let's get to it. Thank you.